So actually, I want to do a quick show of hands. I've never asked this question to an audience, but I think these next two questions are very appropriate for this audience. Show of hands, who thinks finance is broken? All right, about a quarter. Who thinks access to capital is efficient? All right, nobody. I agree. And actually, I think that's the fundamental reason why finance is broken. And so I started Indiegogo, next, to fix finance. And the reason I think it's broken is because I spent my whole life frustrated by how hard it was for people all around me, including my parents, to actually access capital. I was the daughter of two small business owners that spent 30 years building a brick and mortar business, and not once could they get access to a loan. After college, I went into finance to really understand how money worked and realized that that I was starting to fail for the exact same reasons my parents started to fail. I started working with filmmakers and theater producers on the side, and I wanted to help them raise money and build their businesses and build their creative projects. But I actually had many failures, the biggest one being an Arthur Miller play where I packed a house with an audience. I had a whole bunch of actors and volunteer their time, and my goal was to get investors there to witness the whole thing and be impressed and write the check at the end of the night to actually turn it into a full-blown production. Everything went perfect except that last minute. When they turned to me and they said, "That was an amazing production, we're not funding, we don't really know who you are, good luck." So it's in that moment that I realized that finance was broken because the people that wanted an idea to come to life the most, which in this case were actors and the audience, they actually didn't have the power to make it happen. They were completely reliant on what we're calling investors or gatekeepers, whose interests may or may not have aligned to actually make it happen. So that's how I was going to fix finance. I was going to start a company that was going to truly democratize access to capital by putting the power back into the hands of the people to decide what ideas came to life. And so my original idea was actually an offline fund, but it's in meeting my co-founders that I realized if we truly wanted to democratize access to capital, we should use the same mechanism that every other company was doing to democratize their things, whether it was Twitter democratizing information, YouTube democratizing video, Google democratizing information. It was the internet. So that turned us onto the internet, and what we did is we launched Indiegogo back in January 2008, before the word crowdfunding even existed. And what we launched was actually a perks-based platform where anybody could raise money for any idea. One thing to note is I wanted to really democratize investing at the time, but when you go online, again, this is 2008, in the United States, that would make it illegal. So we put equity on hold and actually came up with this whole concept of perks, which has actually been a huge pillar for this whole industry and allowed this whole industry to grow. Where people would go online, offer a campaign where they were trying to raise money for something and then offer perks in exchange for different levels of contributions. The key attributes also about Indiegogo is that we are open, just like every other internet platform out there, as well as global. And so what began was a little platform that started to work. And what we were doing is we were actually helping people who had been locked out of capital, traditional access to capital, very well. We had everybody from small businesses, bakeries who couldn't get a loan using Indiegogo to launch their businesses. We had people like community activists where when the credit crisis happened, his whole community actually went under because their whole town was reliant on tourists coming to town, and so he started a little campaign called a walking video tour or audio tour. We got his whole community behind him, and it was a way to actually entice tourists to come back. And so in the early days, the credit crisis actually helped us because what it did is it not only allowed people who couldn't access capital traditionally, take a look at Indiegogo. When traditional forums started to shut down on people, it forced people to actually take a look at all the other alternatives, and that's when Indiegogo started to rise. So at that moment, though, I was a little bit scared. Are we this counter-cyclical company such that when the economy comes back, we're going to go down? But actually, that wasn't the case. What happened is when we came out of the economy, when the economy came out, actually Indiegogo really did start to flourish. And now we're the largest platform in the world, global, distributing millions of dollars every week, every industry, every country, every type of campaign, you name it, people are using Indiegogo. And so the reason I think it stuck was because Indiegogo is actually doing something a lot more than just democratizing access to capital and making capital more efficient. What we're actually doing was addressing something very, very fundamental in the whole financing process, and that's risk. Specifically, there's three types of risk: financing risk, market risk, and execution risk. The financing risk piece is obvious, but what we were doing was actually reducing the other two types of risk as well, and we didn't even realize it. To give you an example of this is Gravity Light. That's actually a campaign from here in the UK. A guy wanted to launch this light where 30 seconds of lifting would create 30 minutes of energy. It was a brilliant idea. He saw it as an idea for the developing world, as an alternative to kerosene, which is both expensive and dangerous. But he kept going to all the venture investors, asking for money, and no one would return his call because they didn't know if there was actually a market for it. So what he actually did is he went on Indiegogo, raised about $400,000, and proved that there was a need that he was truly solving. Also, what Indiegogo is helping with in terms of market risk is actually the size of the market. So here's an example of a metal band out of Canada. They actually had a label, but they stopped. They were being creatively constrained, and so they wanted to see if they could go it alone and go direct to fans. But they weren't sure if they actually had a big enough fan base to sustain them. Well, Indiegogo campaign proved them right. They did. They actually did a campaign to raise about $100,000, and they far surpassed it with raising over $340,000. And then it's also a way to actually build the market. So here's an example of a kite patch. It's a product where you put a patch on your arm and it keeps mosquitoes away. It's so much better than the DEET that's toxic and bad for you. These guys actually had funding behind them, but they still used Indiegogo to actually bring their brand to the market because no one knew about them. And they did that by raising over nearly $600,000. And lastly, who here has heard of the solar roadways? Yes, this thing has gone crazy. These are two young, well, not young, middle of their life, entrepreneurs who are out of Idaho, tiny town. No one really knows where they are, but they're engineers passionate about saving the world. So they spent the last 10 years tinkering in their garage, coming up with the technology that would actually make all of our roads across the world solar powered, thereby reducing carbon emissions by 85% And there's a lot of other benefits. Well, they used Indiegogo not because they are going to fund the entire expansion of every roadway across the world, because that will cost trillions, but they really wanted to build awareness about this technology so that they could gather interest and, again, keep it running. So market risk, huge benefit being reduced because of Indiegogo and crowdfunding. Secondly is execution risk. So this is one that was also a bit of a surprise for us. What we started seeing is campaigns like the LED Light Cube, who started using Indiegogo as a way to test what people were really interested in. So, for example, this is a light for filmmakers and photographers. The creator behind it didn't know if a longer life, a bigger battery, or a brighter light was what people wanted. And so he actually used Indiegogo to test that, and based on where people funded, he got his answer. He didn't have to guess. And then we have an entrepreneur out of Canada who had come up with a very cool brand of high-tech underwear. I'll explain what that is later. What she used Indiegogo for is really to test her customer segments. She thought her brand was going to be for the normal girl, and her main line was going to be the regular pair of underwear. She actually learned in the Indiegogo campaign that people were funding a different line, much more than her regular line. So she actually switched her whole marketing strategy because she actually discovered a whole new customer segment. And then lastly, the Misfit Shine. What we're now starting to see people do is actually use the platform of raising money through perks as a way to really test their pricing and their features, like I mentioned. So this is an example of an activity tracker that the whole value proposition was for it to be elegant and hide in your clothes. And what the creator had done was launched a campaign and offered his shine at different price points. And when they sold out, when the perks got claimed, he'd offer the same exact one at a higher price point and see where the willingness to pay would stop. And he actually learned that in this process, people were willing to pay $50 more for the black version over the silver version, which was a shock to him. And then he had his funders ask him to offer things like bracelets and necklaces, which he kind of wanted to argue with them, saying the whole point of this is to hide in your clothes. Why would you want to wear it in such an ostentatious way? And when he heard himself saying that, he realized he was fighting with his customers. So why not do that and actually put it to the test? So he used Indiegogo, threw up a perk mid-campaign, and actually learned that accessories were indeed something that his market wanted, and he actually discovered a whole new revenue stream out of it. So a lot of different benefits. So you can see here that all kinds of campaigns now, from a lot of businesses, a lot of hardware, a lot of creative as well, are actually using Indiegogo not just to access capital, but also to reduce their market risk and reduce their execution risk. And as a result of that, we're now seeing campaigns at every stage of their life using Indiegogo because it's helping them find and build their market, as well as actually refine their product market fit, which are two things traditional financiers can't do. So what we're seeing because of that is we now have campaigns who are using Indiegogo to actually attract capital. This is an example of Scan-A-Do Scout. It's a medical tricorder. Who here has watched Star Trek? Hopefully more hands will go up now. Oh man, Star Trek. Anyways, it's a device inspired by Star Trek, which is a doctor in your pocket where you can take it out and you can read your vital signs literally in your pocket. Well, they used Indiegogo to raise $1.7 million to kind of prototype it and get it out in the market. And it had such traction that a bunch of venture investors saw that they truly had this market and they were on their way. So those venture investors then came in and closed the $10 million Series A after them. And it's not just in venture, it's also in other types of traditional capital like government finance. Here's an example of LGBT video series out of Australia where a young entrepreneur just wanted to help change the conversation about what it's like being gay in schools, and so he created this video series. He only raised $8,000. That's all he needed to just fund a few different schools, but because it took such hold and because they got so much traction out of it and so much attention out of it, the government came in and now is funding the rollout of the entire program across Australia. What we're also seeing now is, and this is really interesting because I wouldn't have expected this, is now entrepreneurs who have venture backing or who are well capitalized are actually starting to use Indiegogo as a way to, again, refine their product market fit and get smarter faster. So the Shine, which I talked about, they had actually raised $7 million before even touching Indiegogo. But when they did that campaign, like I said, they were able to refine their pricing, figure out different revenue streams. It actually helped them hone in on their messaging. By bringing the market risk and the execution risk down by far, they actually set themselves up to actually launch a much better launch of their product. And so what they did is we're now starting to see traditional capital then lead to Indiegogo, which is kind of confusing because I never really thought that. Same thing with the Kite Patch. They raised $150,000 from the Gates Foundation, a nonprofit. Now they went to Indiegogo to help launch it, another $600,000 to help build their brand. And what's really cool is, who here has heard of Marvell? $2 to $5 billion company. They're using Indiegogo. Why? Because they're doing it to launch their products so that they're actually launching a product that their customers want. Example of this is the Canoma Create, which is a JavaScript-based toolkit to help people who don't know how to code and create stuff. They didn't do it for the money. They did it because they wanted to build a community and validate their market and really test the product to make sure they were building something that they can then scale later. So here's where it gets fun. You guys, okay? Yeah, okay. What's now starting to happen is that people are completely bypassing traditional capital to get to their end goals. And this is where the VCs in the room should get a little bit nervous. Nick's Underwear that I talked about, they used Indiegogo just to raise $60,000. They didn't have the working capital to go, make their first round of production, their first production line. So instead, they offered their underwear, raised the money to go raise the exact amount that they could go make, and in the process got discovered by Hudson Bay, which is one of the biggest outlets in Canada. And they came in with the order right away. So they actually, in one swoop, went from no production to selling in stores, which is the ultimate for a product or retail product company. Same thing for Protest the Hero. They actually had a record label, a traditional financier in the music world. It's the companies that back you and help you tour. Well, they, like I said, were getting creatively constrained. And so they said, if we really want to make, let's make the music we really want to make. If we were meant to be musicians, let's do that. So they actually used Indiegogo to completely stay independent and say goodbye to their traditional investors. And this is an amazing example. I just met this campaigner last week. Skybell, it's a smart video doorbell. Somebody rings and the picture comes up on your phone. A year ago, this word didn't exist. It was total stealth. They went on Indiegogo last year, raised $583,000 to launch. They're now in the Apple HomeKit store. All happened within a year. Not 1 ounce of venture capital to help them get there. And now what he's saying is I asked him, well, would you take it? And he said, well, it'd have to be the exact right venture investor because I don't actually need them. So what's going to happen? Who here is a traditional investor? It's okay, you can raise your hand. No one's raising their hand. Venture investors, banks, foundations, governments, aka what we used to call gatekeepers. Is there a role for you guys in the future? Is this what your reality is going to be? So what's happening here, I'm not going to answer, I'm going to hold the suspense a little bit, is what crowdfunding and Indiegogo is proving is that cash is actually quickly becoming a commodity. Just being the provider of cash isn't enough. You have to bring something with that. And a good example of this is the Canary. This was another home security system that actually had gotten a term sheet before they even looked at Indiegogo, a $2 million term sheet from an investor. And the entrepreneurs behind it were considering taking it, but the terms weren't great. And they said, look, we're really making this for our audience. Why don't we just go direct to our customers and see if they want to be part of this? And so instead they went on Indiegogo, raised that $2 million in just a matter of weeks. And by the end of the campaign, actually those original investors were literally trying to push the money into the bank under the original terms, and the entrepreneurs said, whoa, 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 no, let's reconsider. And so at that point, they didn't actually have to take the money, but they actually wanted the investors because of some expertise, but what they were able to do is completely renegotiate the terms so that they were much more friendly to the entrepreneur. So what that is, what we're seeing is that as cash is becoming a commodity where you can get cash from the crowd or you can get cash from the traditional financier, what the crowd is bringing are things the traditional financier can't. They're lowering the execution risk, they're lowering the market risk, they're giving you pricing data, all this about your customers that there's no traditional financier out there that I know single-handedly who can give you that kind of data that the crowd can give. And so what can the traditional investor do to stay alive? Well, that's leverage the relationships and expertise. And probably speed is another benefit here, speed to market, speed to capital. So what I'm saying here is actually these two elements are even more important than anything else. And the value that traditional investors bring, this will only get more important as we move into the future. And I do see it being a symbiotic relationship. So you guys can relax now. I'm not saying it's the end. It's a very symbiotic relationship because what Indiegogo and crowdfunding is doing, because of its ability to reduce market and execution risk, is it's actually creating an incredible incubation platform for more ideas to rise to the top in a merit-based fashion, which then makes it your job easier to actually discover ideas and amplify them further. Also, it's providing an incredible market testing platform. So what we're now seeing is we're actually working with venture investors in like partnerships where we're literally trading deal flow. So what we're seeing, I actually even talked to an investor last year who said, I think I'm going to start a new fund where a requirement for them taking money from us is that they actually do an Indiegogo campaign before they launch their full product, because I want to make sure they're launching a product that the world actually wants, not a product that they think the world wants. And we're going to start seeing banks use Indiegogo as a way to source deals. And one day there'll be a day where Indiegogo data and funder data and all this stuff become part of the whole credit loan application process. So it'll be interesting. And so your role as traditional investors will be new. It'll be different. It won't be the old role of gatekeeper, which, if you think about it, when you got into this business, you didn't get into the business to say no. You got into the business because you wanted to help ideas come to life. But because of the high-risk nature of the way traditional finance had been working with how inefficient capital was flowing, you had to say no more than you could say yes. And so with the incubation platform coming, with the market testing platform there, which is the value that the crowd can bring using crowdfunding, your role will be one of saying yes. You'll be actually an amplifier of ideas. And what I think will happen is we're going to have a much healthier financial ecosystem when we're all working together. So yes, it's all kumbaya. What we're going to see is more ideas rising up because now they have a chance. We're going to see faster failure, which is great. A lot of people use Indiegogo to test an idea. They raise no money, and they realize they had something that nobody wanted. So then they move on within weeks rather than spending years of their life working on something that was never going to see the light of day. Because of that, we're going to see better ideas rise to the top, and those ideas are going to be in a merit-based fashion. So things like gatekeeper bias will go away. An example of this is on Indiegogo, or in venture in the States at least, Only 3 to 13% of venture-backed companies are run by women. On Indiegogo, 47% of all campaigns that reach their funding target are run by women. And the entrepreneurial campaigns specifically, that number is 42%. So what's going to happen is a greater meritocracy will happen. Ideas will rise to the top based on their true value to the world versus what one person thinks their value to the world is. And because of that, we'll level the playing field and more ideas will come about in a more equal way. And we're going to see less waste. So especially with product-based companies, the whole problem with them is that you have to go build your product and then go find your market. Well, we're swapping that. We're helping you find your market first. So then you go build your product and you go deliver it. And what we're going to see is a lot of less stuff going into our landfill because of inefficiency there. So then the next question is equity crowdfunding. I originally started Indiegogo to democratize investing, but when my partners convinced me to take it online, we knew we couldn't offer investment in equity because that would be illegal, at least in the States. The UK is ahead of us, so good job, guys. But we have helped make the Jobs Act pass because a lot of our success was showing that. But the question is, will equity crowdfunding have the same kind of risk reduction benefits that perks-based crowdfunding will have? And I know there's some speakers about to go up, so I'm excited to hear what they have to say. But the question is, I don't know. But the first two things I think about is maybe if equity crowdfunding can remain open. Or be open. And there's no equity crowdfunding platform that's open that I know of to this day. And what I mean by open is no gatekeepers, no curation, no application. That's how Indiegogo became the sustainable open platform that it is today, is by not having an actual creation process, which is how we've eliminated the gatekeeper bias. And then the second factor is the perk. So we came up with the perk as like a fill-in for profit when we couldn't do equity. But that's actually become the pillar of the whole perks crowdfunding industry to date. And that perk model is what is driving market risk down and what is driving execution risk down, because it's when people are getting a perk, they're actually showing or demonstrating their interest in an idea and saying they want it to exist. So if then the reason that people fund just becomes profit, that motivation goes away. And so that's an open question mark, but I'm excited to see where it goes. So I opened this talk by talking about, democratizing access to capital and how we're doing it. And really what it's about is where is funding headed and where is the future of funding. And if everything continues to go in the direction where we're democratizing access to capital, but traditional financiers are now working side by side with the crowd to make more and better ideas happen, I think the future lies in all of us funding the future together. So, thank you. I went over, sorry.
That's great. So there's other crowdfunding platforms out there. I can't remember any of their names. And it's an increasingly competitive world. Mm-hmm. What do you do differently on Indiegogo that you think will give you the edge?
Well, our philosophy is fundamentally different. I think we're the only platform out there that created crowdfunding to democratize access to capital. So we've been open as that's a huge differentiator for us from the beginning. So when we launched the site, we didn't have an application system, there wasn't a curation system, and that has kind of been built into our ethos. And because of that, what it made us do is get really good with education and empowerment. So that's another big differentiator. We are building the most scalable education out there, and the #1 driver of success is actually preparation and strategy and how to use the platform to the max. And so what also makes us different is that education piece and the infrastructure we have in place, whether it's our customer happiness team that's available 24/7, or our data science team that's mining our site for data insights and correlations of what drives success, and we're sharing that with our customers, to our internal coaches that will get on the phone, all that kind of stuff. But the third thing is really the optionality and flexibility that we built into our platform. Again, we're here to help people get their ideas off the ground. And so we know that when people start, who here has started a business and what you built was the exact thing that you said you're going to build up front? Right, nobody. It changes, and so we wanted to allow that change in the campaign process. So we have things like perk swapping or the analytics platform on the back end that no one else has. so that you can actually test your assumptions throughout the campaign. That's why it's become a great place to actually refine your product market fit, which you can't do when you launch a campaign and everything is fixed.
We've been talking a fair bit today about risk. The more you open to the community in an unfiltered way, I know you have certain filters, but I think fewer than Kickstarter that tend to reject proportionately more campaigns. The more you open to the community, the higher the risk that people who fund a project are not going to get what they thought they were going to get. How do you change that? How do you solve that problem?
Data and education. So the two things that make us different too. So when you're an open platform, and payments companies know this, people are going to use your site in a way it wasn't intended or try to exploit it. So we've actually developed the systems on the back end to catch that suspicious behavior faster than any individual or human being could ever do. That's a benefit of not actually having a human-based application system that traditional finance has had since the beginning. So you're not subject to human error in that regard. So that's one. And then the other thing is educating the market. So I know we have competition that makes their campaigns say things like, you must ask for money, or you can't use Indiegogo, you can't use the words market validation, stuff like that. I think that is doing a disservice to the industry, because as we're seeing, Indiegogo and crowdfunding has an incredibly important place to play at every stage of the company. So whether it is just getting enough money to get it going, or if it's refining your product market fit, or just finding your market, you want to be able to say what you're trying to do and be able to be transparent. And so we're doing a lot of work just to educate both the world as well as our customer base to be open and transparent about what you're trying to achieve. So if your goal is to eventually sell to a larger company or go public or whatever, be transparent about that. So that when people are funding, they know what they're funding, and then when you do sell or go public or whatever, they get excited because they were part of that success versus resentful because they thought something else was going to happen.
Thank you, not least for traveling 6,000 miles to share this wisdom. Indiegogo's Danae Ringelmann.